Hello everyone, my name is Harry Partington and I've been a member of the credit union for 13 years. During that time I've had various savings accounts and a couple of car loans. I was a volunteer director for 9 years, 7 of which I was chair of the board. Just very quickly, in 2018 I invested in a deferred shares offer, and that seemed like a better way to support the credit union than holding my money in a cash ISA, as it provided long-term capital in exchange for a fair return. Why the credit union? For me, I really like the ethos and values, and the fact that the reality is it brings different parts of our community together to help each other financially. So that's me. From an investor perspective, and just to be clear, my investment is pretty modest. It's what I could afford. For me, the next phase is about understanding what a potentially modest investment could give me. Well, it's a further support for the credit union and its growth, and GWCU really doesn't have a particular challenge in raising deposits to lend out. Bristol and the Southwest overall has a good number of fairly affluent areas that it can draw on and has drawn on to raise funds to then lend out. But what it does need are people potentially like me to say, actually, I'm prepared to not put my savings into a cash product with the credit union, but I'm prepared to take a bit more of a risk and to understand those risks and put my money into something like the bond offer, which of course does have an attractive return as well. So I think
what are credit unions? They are not-for-profit cooperative structures. They are member-owned, member-controlled. They operate across what's called a common bond. Often that common bond is geographic, but it could be a community of place or interest. So you could have, and do have, NHS credit unions, police credit unions, taxi driver credit unions, as well as communities like Glasgow, where there will be 30+ credit unions across small postcode areas of Glasgow, in particular, or indeed the southwest of England. So whatever they have 4 similar core objects. What are those? They promote thrift. That's different from savings. They promote thrift. They train and educate members in the wise use of their money. They use their members' savings, their deposits, for mutual benefit, and they create sources of credit at a fair and a reasonable rate. And what are those fair and reasonable rates? They are price capped. So the credit unions in Britain, in England, Scotland and Wales are price capped at 3% per month on a reducing balance. That's 42.6% APR maximum. Cannot exceed that under any circumstances. Can't add on admin fees to exceed that. That is the maximum amount that they can charge for lending. So these are asset locked mutuals with limited investment areas themselves. James there can't put all of his money into more speculative stuff. They can offer dividends and/or they could offer interest-bearing shares to members. And as I say, they come in all shapes and sizes. There is a long tail of very small credit unions, and there is a very small number of very large credit unions. They're regulated, obviously. They're regulated by the FCA, by the PRA. The money is perfectly safe. Financial Services Compensation Scheme operates. All deposits are protected. And essentially, they offer, in my view, a sort of limited number of loan products. A handful of credit unions, bigger ones, offer mortgages, but in the main, these are unsecured loans. They are used by hundreds of thousands of households across all ethnicities, income levels as well. People of all incomes are members, often using it for ethical purposes, often using it for financial reasons. So they provide lifelines, in my view, for communities, from replacing damaged white goods to paying for a kitchen, paying for a holiday, debt consolidation, aspirational stuff, as well as essential stuff. The big worry out there for everybody right now is, of course, the cost of living on the back of a pandemic as well. You wouldn't kind of start from here if you could avoid it. On the back of a pandemic, which did impact the income from lending, not just of mainstream lenders, but of credit unions. The other big issue for us at Fair4All is the demise of forms of high-cost credit. and changes in lender behaviour more generally, which limits the choices that people have, particularly those on low incomes or with thin or poor credit files. So we've seen this massive rise in friends and family borrowing, and we believe there is a potential danger of illegal money lending kind of becoming a much bigger thing. So what's another?
Fair4All Finance was set up to address, the difficult reality that there is massive market gap in fair and affordable financial services, especially credit, available to people in financially vulnerable circumstances. And for those who don't have a credit profile to access affordable short-term credit when they need it to manage a range of shocks and difficulties that they face in their lives, something that many take for granted. And this demand is really only increasing without better ethical finance options in the marketplace. Millions in the UK are impacted. We know that when people are unable to access short-term credit when they need it, they're forced to turn to very high-cost loans that can actually compound their problems. And when those aren't available, many turn to even less favorable options, including illegal lending, which can be harmful in a number of ways. Fair4All Finance is investing into community finance providers that are best placed to lend responsibly and also grow their outreach to these underserved customers in a way that maximizes the possibility for positive outcomes for these customers. And we recognize that this is difficult, it's expensive, it requires an ability to manage a very complex risk assessment when approving loans in order to be sure you're acting responsibly in this space. Towards this goal, we're working closely with credit unions because they are trusted community lenders located across the UK with, as Nial described, a large amount of capacity and future potential, really, through the deployment of their members' deposits to offer more affordable credit options to people who may be in financial difficulty. And they can also offer services beyond credit that other lenders don't offer.
Many of our members are on lower incomes, and the cost of essentials has risen much faster and higher than price rises more generally, even though they've been pretty amazingly high as well. So we've really seen the issues with members being able to afford to repay loans grow to some extent. But what we've done is really set up a team to support them within the credit union, our member support team. And that team helps members who are struggling with their loan repayments using a range of different approaches. So, for example, offering payment holidays where people are particularly struggling, restructuring loans so that people can maintain a positive relationship and they can maintain their access to credit, which is really important for folks when the small sum credit market as a whole has been shrinking, as Brian said. And really, I think the feedback we've had from being able to support people through the challenges that they're facing at these difficult times has been amazing. We really value the fact that somebody's there to look after them and to help them as much as we're able to. Now,